Let's bring in Tom Hancock. He is portfolio manager at GMO, overseeing the U.S. and international quality ETFs. We'll get to your sort of rather controversial name in a moment, Tom. We're near all-time highs, 17% gain in a month for the NASDAQ. Are you still a buyer?
Hey, Brian, great to be on. So, yes, we are still a buyer of large cap quality tech generally. That doesn't mean every stock in the NASDAQ by any means. Obviously, you have to be a little nervous about markets being at all-time highs. But I would say, like, the kind of news flow we're getting about investment from Saudi Arabia around developments in the actual technology of AI, which ultimately that's what matters, right? It's whether the technology works over the long term, not shorter term policy things. So yeah, there are a lot of names we like there, kind of starting with from the top down with some of the mega caps like Microsoft.
Yeah, I mean, what happened? I understand that tariffs took sort of the wind out of everybody. A lot of these companies, though, Tom, they're not really tariff related. I mean, I'm trying to think of something that Microsoft may be exposed to. The whole market sold off. To what do you ascribe this really historic pivot for the markets?
Well, there would be tariffs around, say, NVIDIA and their engineering of the China regulations.
Yeah, can't sell certain chips. But by the way, that was there before this.
Absolutely. I mean, really what you see when in uncertainty is just risk aversion. And when you see risk aversion, people are averse not just to the immediate risk, but they're just averse to long duration aspects. They're averse to stories that aren't really going to come to fruition in the sense of true profitability for AI a few years down the road. So this is, I think, typical for market behavior. And we see that as a buying opportunity for some of the growthier stocks, whether it was 2022 at the end of that year or at the beginning of April. I say, that said, that particular buying window closed maybe quicker than we would have liked it to, but it was a very nice opportunity there for a moment.
All right, let's go back to that name that we just teased. We didn't give people a lot of time to write in, but they probably knew it once they saw it. That is United Health. Now, Scott Wapner and the gang reported there's 3 insider buys that were being reported today. We don't know when they happened. They happened this week, but those insider buys happened, or at least were reported today. Stock's lost, half or more of its value in a month. You're not scared off of UNH. How come?
Yeah, board member buying and new CEO's compensation package is very heavily stock loaded, and I think that shows conviction within the organization. I mean, let's be clear, United did make business mistakes. They clearly misunderwrote their insurance business on the Medicare Advantage line. But the good news is that insurance companies reprice every year. They have a strong balance sheet. They have great cash flow. They can get around this problem. I think the sort of background fear has to do with the negative sensitivity to the reporting, news flows, litigation threats. And I think actually, in the end, truth will out. And some of the stories about their business practices are really misleading. Like the Medicare coding issue that comes up, this idea that, oh, no, they're getting more payment for people who have a condition like diabetes that they're not directly treating. The point is not they're treating it. The point is those patients have higher actuarial liabilities, like a life insurance company charging more for a smoker, right? It's not that they cure smoking, it's they bear more risk. And that's totally reasonable, rational. There's nothing, we think, sinister about it. So we feel like the facts are kind of on the side of these companies over time, and the business mistakes can be fixed. And by the way, we're very positive on Steve Hemsley returning as CEO.